Happy Wollaston Wednesday, everybody. This is Alex Chicola from Wollaston Real Estate Investments. I put together this little slideshow presentation, and if you're interested in getting into the apartment, building, or multifamily investing space, I think you're really going to find this little video very interesting. So it's labeled How I Could Have Lost $108,000. It's a case study on income for a 26-unit apartment complex we were going to purchase. Spoiler alert, we did not buy it. With that said, always consult an attorney if you have any questions. I'm just sharing my personal experience in this space. So as you know, we're looking to get into the multifamily apartment space. It's an area that we really want to break into. We want to diversify our business model somewhat, and we're getting there. With that said, there's a different level of due diligence that is required on these types of apartment buildings. You're not necessarily underwriting a deal for the value of the building. You're underwriting a deal for the value of how it operates, how its rental income is compared to its expenses. So you have to underwrite that very, very, very strictly like a detective. I want to focus on financial due diligence related to income. So we've got a couple different types of income. We've got rent, which is obviously our biggest one. You underwrite physical vacancy and loss to lease vacancy. Physical vacancy is when the heads don't hit the beds, and loss to lease vacancy is when a tenant pays below market value for the rent. So let's say rent's $1,000, but the tenant pays $500 a month. That's a $500 loss to lease vacancy. Properties might make money off parking, laundry. Sometimes investors or the sellers will try to include late fees, non-refundable security deposits, pet fees, stuff like that. I call that bad income. The reason I call that bad income is because it's not sustainable. You don't want to charge late fees every single month. You sure as heck don't want to be not returning security deposits because your tenants are trashing your apartments. It's better for everybody if the units are kept clean and everybody pays on time. So I never capitalize that income when analyzing the value of a property. How do we verify these incomes? So we've got operating statements from the seller and the manager. You've got tenant estoppels, rent receipts, leases, K-1s, and most importantly, bank statements. If you can get anything, get bank statements from your seller for the last 12 months. That's exactly what I did. So I requested a handful of documents, and I'm comparing the rent roll to his operating statement and what he said he collected. So he told me over the last year he's collected $255,000, and I'm thinking this thing is a home run, because when I saw that $255,000 for the purchase price, I was like, why is this thing not sold yet? I'll tell you why. So what I found out is that he's only deposited $200,000 into his bank account, which leaves me with a $55,000 discrepancy, cash on hand. It's much harder to prove cash on hand, but I'm going to give this guy a chance to try. So I say, surely any good landlord with 26 apartments would give his property manager rent receipts, right? You absolutely want to give every tenant rent receipts, but you especially want to give the ones that pay cash. And as a tenant, you should always request a rent receipt, because if you don't get a rent receipt, how are you going to prove yourself in the event of an unlawful eviction, right? So I request the rent receipts to find out that he is missing 14 to 16 rent receipts each month on average. How can you prove tenants have paid every month if you don't give rent receipts or deposit the money in your bank account? Well, you really can't. But I went with what I had, and I looked at all the leases, and I put together this spreadsheet. And over the 26 units, I said, how much is each unit supposed to be rented for? If the tenant is on housing assistance like Section 8, how much does Section 8 pay? And then how much does the tenant pay? So everything in yellow is an issue. And what I found out is that only 6 out of 26 units paid the correct rent for the last 3 months. That's a big deal. 20 of your 26 units aren't performing correctly. Most of them are paying partial rent, if they're paying any rent at all. That's why this thing was so cheap. So I said, tenant paid. How much is the landlord supposed to collect from each tenant the month? About $11,656 according to the leases. But if you look at the bank statements from April, March, February, and January, he's depositing anywhere from $2,600 to $3,900 a month. That's a $9,000 difference compared to what his leases say he's supposed to be collecting. That's a $108,000 discrepancy based on his bank statements to the leases. Then I'm like, let's look at the housing assistance. How much is Section 8 supposed to pay every month? About $9,933, because that's straight from the Section 8 office. But he's depositing anywhere from $10,800 all the way up to $12,400. Why is he getting more money in Section 8 rent? And a lot of these tenants haven't changed over. So that makes me wonder, is this landlord commingling funds with another property that has Section 8 tenants? As in he's got two properties, one bank account, and maybe he's not getting Section 8 rents from the subject property, but he's getting it from another one and he's depositing it so he can try to pull the wool over my eyes. And I know that's kind of a bleak outlook, but you have to think, how is this seller trying to screw me over? If you think like that, you won't get screwed over. So because this landlord doesn't keep appropriate records, I can't verify income. So I had requested this initially, but I requested again. I said, look, I need to see K-1s. So a K-1 is an IRS tax form. You do it every year with your accountant. And the purpose is basically to share the partnership's earnings, losses, deductions, and credits. Shows you how you're performing. And if you work with an accountant, they're not going to fudge your numbers. They're going to make sure that all of their I's are dotted and all of their T's are crossed. Because if they get audited, well, they can't lose their license. They need to do it by the book. So I call the agent, who's a great guy, by the way, and he didn't know the property was performing like this. I think that the seller was, working to pull the wool over his eyes, and he was relatively successful. But the agent calls me, and I know he's frustrated, and he says, look, I can give you K-1s, but it doesn't appear that they're reporting this property correctly to the IRS. He said, it's not going to show the income like you think it's going to show. And I said, all right, well, in conclusion, this deal reeks, and I'm going to get out of it. I need you to give me back my earnest money deposit, please. Because according to the leases, there's a $108,000 discrepancy on what is supposed to be collected in cash or check and what's actually deposited. According to his rent roll, there's a $55,000 discrepancy the landlord can't prove he collected, and he's not reporting it correctly on his K-1s. So this deal, bye. I had to get out of it, and I'm glad I did, because if we would have bought this and we would have taken on 20 units that weren't performing, I'd probably be bankrupt by now. So with that said, I'm Alex from Wollaston Real Estate Investments. I hope you enjoyed this. I hope you found it informative. If you ever want to talk shop, feel free to shoot me an email. We can jump on a call, or if you're local, we can grab coffee. I appreciate it, and talk to you soon. Have a good week.